Well, it's been quite the day, quite the weekend, actually. And yeah, there's just the news keeps getting better and better and better. You know, this is what we do on this channel. We bring excitement and fun. Listen, Black Tesla on YouTube adds his echo to the other testers of FSD 12.3. He gives it and he rates the various FSD levels. And he says on this new one, he gives it a 9 for comfort, which is a big improvement. He gives it a 9 for decision making. He gives it a 9 for safety and a 9 for no interruptions. So that's the I guess we're starting to see the nines, right? The we'll see maybe next time he'll add another 9. But the other way would be maybe he'll have a few 10s over the next couple of weeks. But this comes from Ashok Ellisworthy over at Tesla. He says, and by the way, you can find him at AELLUS. Oh, I said it wrong. Elliswamy. A Elliswamy. Okay, with 2 L's. Motivating to see the overwhelmingly positive response for our latest FSD version 12 release. Kudos, the incredible team at Tesla. It's an honor to work with them every day. This is the first version of FSD that uses neural networks end-to-end, going from raw camera videos and vehicle kinesthetics to producing control actions to drive the vehicles. Efforts over the past several months went into making this new approach beat the previous V11 stack developed over many years. We believe V12 has net surpassed it now, and hence the next set of 12.456 whatever releases should bring unprecedented progress. Okay, that was the key word there. Then Elon Musk says, major improvements coming for Summon and Banish, which I guess is Auto Park, next month. I assume that's got to be April. He also says version 12.4 is another big jump in capabilities. Our constraint in training compute is much improved. These are big. These are huge. Okay. All right. Then we've got Scott Walter, who got his version of it. He's over at Going Ballistic 5 over on X. He says, it's official. We made it into the 5th ring of FSD hell. The FSD rings of hell are 0 is an Elon test. The next one, number 1 is a whole Mars test. Number 2 is a self test. Then number 3 is a friends test. 4, the children's test. Number 5 is the mother-in-law test. Then number 6 is the spouse test. 7 is Nishta. Number 8 is the haters test. And number 9 is Dano Clown. So if it could ever pass the Dano Clown test, if it ever passes the Dano Clown test, I guess we'll know it's absolutely perfect. Larry Goldberg got his 12.3, and he says it's a step change with work yet to be done. He goes on to say, however, in a post I made a year ago, I assessed that we were 1 to 3 years away from true or complete, I call it FSD. Now I feel confident that sometime between late 2024 and mid 2025, we should see a general release with no beta and no hands. And Tesla, he didn't say that, I said that. And Tesla seeking license to operate vehicles autonomously. From Rob Mauer, he pops in. Haven't heard from Rob in a while. Apparently, he got his 12.3 too. Tested FSD version 12.3 in downtown Chicago yesterday. Got 0 disengagements, no interventions in the first 30 minutes, despite incredibly dense traffic and pedestrians during St. Patrick's Day. Easy for me to say, St. Patrick's Day festivities. Extremely impressive. The most impressive moment, it flawlessly handled, and this is a big one for me. This is what I've been talking about. It flawlessly handled back-to-back, extremely complex intersections, which were all-way stop signs with 6 lanes of traffic and 50 plus pedestrians. That's pretty impressive. Okay. So this is Randy Kirk, by the way. In case you didn't know that, I will be having another bonkers day tomorrow. There is so much going on tomorrow. You do not want to miss one program tomorrow all day long. I'm just wondering if FSD will move the market tomorrow morning, aren't you? I'm also wondering whether the increased prices in both the United States and Europe on Model Y across the entire list will also potentially move the stock tomorrow morning. So be sure to check in. Brian, probably at noon, and Larry for sure at 5 o'clock. So I hope to see you all day tomorrow. You know what to do. Like, subscribe, hit notify so you can be notified of all those things. And then join Patreon. We love to have you over on Patreon. We could use the additional revenues to pay the help, including me. But remember, I do have 2 full-time people that are on the staff helping produce this show. All right, we got Zenagler Heinrich Zane. He's at Heinrich Zane. Tesla semi-program update. Another one of my favorites, right? Tesla is working with a new customer in preparation for delivering semis. It's a customer other than Pepsi. Now, we heard about this last week, or so I think I reported on it, that there was another customer, but he goes on. He's got some more information now. The new customer is not any of the well-known buyers like UPS, Anheuser-Busch, Walmart, JB Hunt, Cisco that we already kind of knew about. The next customer's use case is short-haul deliveries, less than 250 miles, pivoting to produce standard range Tesla with 300-mile range semis versus the long-range 500 has these advantages. Number 1, 2 battery packs versus 3 battery packs. Each battery pack is equivalent to 16 Powerwalls worth of 2170 cells. 2, standard range semis can be produced for the same battery cost as 2 long-range. Deeper penetration, more impact. Number 3, the demand for short-haul semis is huge. Number 4, the pollution impact is more profound, and the reduction will occur in populated cities versus the fast unpopulated areas that long-haul trucks go. Number 5, 6, I forget where I am now. Standard range is shorter and therefore more maneuverable in tight city streets. And then finally, short-haul routes don't require the nationwide mega charger network that it doesn't need to be in place, as these trucks will return to base each day. Anyway, bunch of advantages to moving towards that truck as the one that maybe becomes the truck that they really push when we finally start seeing, what would you like to see the first year? 40,000. I think that's what Elon said. All right, what's going to be happening next week in the markets? So many things this week. Oh my goodness. I'm going to really be looking forward to this one on Monday. This is the Home Builder Confidence Index. Now, the home builders' confidence have been building and building because interest rates were expected to come down. Now, the home builders' confidence might be lessened because it's not happening, but their confidence might be increasing because prices continue to go up and there's still a lot of demand. But anyway, you get the point. I don't know which way it's going to go. Right now, the economists that they polled are expecting a 48 or 48 out of 50 on this one. 50 being average or, flat, 48 meaning not so confident. So we'll see what happens on that one. That would be the same as it was last month. It could go either way. Don't have a good guess on that. Housing starts information comes in on Tuesday morning. Last month was 1.33 million housing starts. This month, 1.45 is what they're projecting. Better weather, of course, also getting closer to season, and also, a lot of permits came into the system last month. So that's why they're expecting an increase there. Same thing on building permits. Permits last month were 1.47 million, and this month they're expecting 1.5. Now, remember, those numbers are all on an annualized basis. It's not like 1.45 billion houses are going to get started next month. It means 1.45 million on an annual basis. Okay. Wednesday, we've got, guess what's happening on Wednesday? Yeah, that'll be a big day. This is the Federal Open Market Committee meeting and their interest rate decision at 2:00 Eastern. And then Fed Chair Powell has his press conference at 2:30 Eastern. We will be reporting that as soon as Powell gets done speaking, and then probably have a separate we usually have something right as soon as Powell gets done speaking, and then we do another program later in the afternoon with Jeff Lutz. Hopefully he'll be available to talk about what from his standpoint, what took place during that meeting. And I'll talk more about that in a minute. Thursday, we've got initial jobless claims. They're expecting that to go up just a tad. But as I've mentioned for the many, many weeks in a row here, they're so far off on that one. I don't even know why I look at what the economists are expecting, the people that are polled, because they're just completely wrong. They have no idea what the numbers are going to be. Then you got the Fed Philadelphia Manufacturing Survey. Last month was up 5.2. They are expecting that to drop to a -4 for the next month. That's not good. Manufacturing is in the doldrums. The S&P Flash U.S. Services PMI last month was 52.3. They're expecting that to drop a little bit to 52. S&P Flash U.S. Manufacturing PMI was 52.2. These are good readings. Anything over 50 is a good reading. Last month, manufacturing PMI was 52.2. That's expected to drop to 51.8. I'm sure the Fed would like to see these both slip to 50 or 51 or 50, maybe even 49, but not manufacturing. It would be better if manufacturing stayed, and then the S&P services one would be the one that we need to drop a little bit in order. I know I don't really want the economy to stall, but that seems to be what the Fed wants to have happen to get interest rates down. Okay, U.S. leading economic indicators. We will talk about this a lot next Thursday, okay, because especially if they're right. Last month it was down 0.4. This month they're saying it'll be down another 0.1. This is, I think, 18 out of 19 months, or maybe 19 months in a row. It's been going down, down, down. U.S. leading economic indicators have been going down, down, down. And meanwhile, the overall GDP has continued to be good. This can't go on forever. There's some disconnect here. I will do a lot of research between now and Thursday so that I can give you a very thorough kind of understanding of what are people saying about this disconnect between the leading economic indicators index and GDP. It might have to do with productivity, but I don't know. I got to do more research before then. All right, existing home sales are now remember, before, what we were talking about before was new home production. Now we're talking about existing homes sales. That's expected to drop from 4 million to 3.92. This would not be surprising. Time of year is out of season. 4 million last month was a shock. 3.92 million would actually be a good number, especially when there's no inventory. Again, that's on an annual basis, please understand. Okay, then we got a bunch of Fed speakers on Thursday. Michael Barr on Thursday, Chair Powell on Friday, Vice Chair Michael Barr on again on Friday, Raphael Bostic on Friday. So lots of Fed speak. Here we go again. You know what they like. Okay, I want to talk about the Fed for a minute. All right. It's really easy in this environment to be thinking about every Fed meeting and every Fed speech as the most important thing happening, because it is. No, okay. I mean, there's other things that matter, but you might remember, I think it was like 4 months ago or 5 months ago, and I said that I believe that the Fed and interest rates and inflation and all of that, we can take it off the table. We can start looking at earnings. We can start looking at revenues. We can start looking at the things we normally like to look at instead of always having this overhang of the Fed and having to watch the CPI and the PPI and PCE and all these things instead of what really, well, I mean, they all matter, but they're driving the stock market and they're driving the economy. And it's just, it's not the best way to run an economy is to have all of this attention around those items. So anyway, that hope, that truth lasted about 3 weeks, I think. And after the Fed pivoted, and then we thought it was over. And then 3 or 4 weeks later, it was back as being the top thing everybody's watching. Well, anyway, what will the Fed say this Wednesday? What will they say? What will the dot plot look like? The dot plot is where each of the Fed, the 18, I think it is, members, all put their expectations of when they will be ready to cut rates or raise rates. They'll put in this case, it'll, I think, all be cut rates, but which month would they be cutting? How often would they be cutting between now and the next 9 months? Maybe it's for a year, I'm not sure. So then we'll get the dot plot. Now it's predictive, but it doesn't mean that's what's actually going to happen. And the change in the way that the Fed has seen things, it's possible that we won't. I just said the other day, I don't think we'll see a rate cut until July. Now, here's what I'm going to be listening for, though. The dot plot doesn't interest me as much as these 3 things. I'm going to be listening to what Powell says about their insight, what their overall view on inflation is. We got the true inflation saying one thing. We've got the Fed saying something. We've got the CPI and the PPI, everything. What is their understanding of inflation? So that'd be number 1. I just want to hear what he says in general. And then does he think it's going up more? Does he think that this is a flattening out period that we're going through right now? Does he think that this was just a temporary thing and it's going to go back down again? Really want to know what he thinks. My greatest concern is that the underlying reason is oil, because oil has gone up from 70 to 80. That's a big increase, and oil goes throughout everything. Every single thing you buy has an oil component, okay? And if oil goes up, it can just do it all by itself. You don't need anything else. And you know that we've got Russia and Saudi Arabia that have already said they're not going to probably increase. Well, they're not going to increase this quarter. I think, have they made a statement about next quarter? I'm not 100% sure. But if I was the president right now, if I'm Joe Biden, I would stare down the anti-oil folks in my party and I would open the spigots. I would drive down the oil prices before the Russians and the Saudis push too hard and drive inflation back up. Okay, now, second thing I'm going to be listening to is going to be the rental housing situation. What is going to be, what are they hearing? What do they think is really happening with rental? Because rentals, rents, regular rents, not the so-called, owned equivalent rents for people that own their own homes. Not that, I'm talking about the real rents are completely different. The numbers of CPI, CPI and the PCE are completely different than what we're hearing from Trueflation, Zillow, et cetera. And Powell has mentioned this. So how are they discounting that? How are they looking at it? That's another thing I'm going to be looking at. Finally, number three, I'm going to know, what does the Fed think about unemployment bumping up against 4% and going up 5 points in 6 months? What does he think about that? Does he think that that is going to become number one reason again? See, he talks about this balance, and right now the inflation was the higher. Okay, but that unemployment's the other thing they have to work on. So unemployment goes up. If it gets over 4%, is that the time when he has no choice but to cut, even if inflation is still a little wonky? So those are the three things I'm going to be looking for. Okay, this is from Market Watch, the latest American Association of Individual Investors poll. Never heard of it before. Okay, but anyway, it's a popular sentiment gauge. Showed that more than half of the respondents were bullish last week. A number that the organization characterized as unusually high. You've heard me talk about this. This was the first reason I began to think this year that we might be looking at a recession, either flat, negative, whatever. But when everybody is bullish, and he's saying that this half of them being bullish is unusually high, these are the things that worried me. The number one, that's when I started looking at all the other data. And right now, quite frankly, if you do an honest look at all the data, if you look across all the data points, most of the data points are pointing towards recession. Most of them are. So I'm not even sure which ones you can really point to other than GDP and productivity. I mean, obviously, I like the productivity numbers, but maybe the productivity numbers are hiding the fact that the unemployment picture is getting worse by the month. Anyway, here's where the markets are now. Let's take a look. What did I do with my phone? Oh, here it is over here. How did I get over there? Okay, let's take a check here. We have got the bonds. Here we go. The 10-year is only up 0.2 of a basis point right now, but everything else is up more, and the 2-month is up 2 full basis points. So that inversion is spreading out today. Now, it must have gone down at some point because it's only about 110 basis points difference right now, and it has been up around 130, 140. So the inversion has come down a little bit overall. And then the 2-year is up 0.7 of a basis point, and that inversion now is about 41. So it's been in a range of 30 to 50. And so sitting at 41, that's right in the middle of that range where it's been. But again, who knows why this inversion? It's another one of those data points that we keep talking about that is supposed to be predictive. Okay, let's go on to the oil market. We've got it up 6 cents right now, but it's sitting at 81.10. This is from 70. Actually, 9 months ago, 8 or 9 months ago, it was at 76. 77, that range, and now it's at 81. Now, at the same point, a year ago, it was at 90. Okay, so it's down from that year over year. Gasoline is almost back, though, to its highs of about 12 months ago. So those two are impacting these inflation numbers as much or more than anything right now. Natural gas up 7 cents. That's 4.53% though. And it's now sitting at $1.73. Remember, we kept talking about how volatile it was. Well, that's pretty volatile. 4%, 4.5% in one day. We're back to the volatility again. We've got the dollar kind of flattish right now. We've got gold very flattish right now, but at 2,159. So about where we've been. Copper up 0.3% at $4.11. So well over $4 now. I keep promising you that I'm going to, well, not, I think I promised you once that I'm going to look at the rest of the commodities. I have not had a chance yet to do that. I will do it. We've got Bitcoin down 179, but down a lot over the last few days, back to 67,000. And then here's the equities. We've got the Dow down 25 or 0.06%, S&P up 3.75, which is 0.07%, NASDAQ up 31, which is up 0.17%. So all of those kind of a narrow, NASDAQ doing better than the Dow, which is not that unusual, and a mixed bag as we go into tomorrow morning. Okay, so earlier today, very important, listen up if you're still with me. I did there's a really important part of analysis of any company. I don't care, or any system even. And that is that people commonly don't look at the incremental elements. So commonly you might have the sales department saying, we need a 30% increase in sales this year. And you've got the buying department over there saying, we need to cut our cost by 10% this year. And somebody else is like, okay, we need to hire. Anyway, everybody's got their own department and they're all looking at these things. They needed these big, big increases. But if sales went up 3% and purchasing got their cost down 2%, et cetera, and everybody got little pieces of that instead of worrying about massive increases everywhere, you'd be shocked at how fast that adds up. Well, I just did that for Tesla. I did that earlier today. I want you to take a look at that, because what we're sitting on right now is a situation where everybody's downgrading the stock, talking about how it's going to lose money or not, or automotive division is going to lose money. The overall company is going to have a year-over-year net negative in terms of earnings. I don't think so. And I think if you look at the incrementalism that I talk about in this, I think you're going to agree with me. So look at, here's the card right there where you can go just click on that and it'll take you right to that video in case you haven't already seen it. By the way, it's getting massive, massive attention right now. Lots and lots. It's getting so much attention. I almost didn't want to put this one up to have it interfere with it because the numbers are so big. But if you haven't seen it yet, you might want to go ahead and check that out. So tomorrow morning, be sure and be with us after the bell, and then stick with me with Larry, with Brian, and then Larry. Going to be a great day. Going to be a fun day, even if the market doesn't treat us well. But maybe it will. Maybe tomorrow will be a really good day on the market. All right. I think that's all I got right now. It's been great talking to you.